Hello, I'm Ondo Duckworth, CEO and founder of AgriDex. We have with us Matt from Ondo and Nick from Solana Institutional.
We're kind of moving forward the world's payment systems as a whole in crypto in a way that without on-chain markets, you could never settle this stuff so efficiently and reliably.
2 of the world's 20 largest asset managers announced they're coming to Solana, and 2 of the world's 20 largest banks coming to Solana. So I think it shows that the institutions are not only coming, but they're here. And I think TradFi will meet DeFi and create really exciting new opportunities for everyone in the Solana ecosystem.
The big thing for us is removing the friction that exists in the middle, but also directing payments much quicker with stablecoins. Do you think that more sort of international stablecoin instruments are coming?
You'll have stable pairs with fiat from virtually every country in the world. This year, we passed Ethereum mainnet on DEX volume and NFT volume, stablecoin volume, virtually every key metric. Solana is now outpacing Ethereum.
The liquidity on Solana is even more impactful, I think, than most people realize, just because the friction to moving that liquidity is so much lower.
Hello, I'm Ondo Duckworth, CEO and founder of AgriDex. And today we're putting together a selection of interesting industry leaders to talk about the world of RWA, to talk about the Solana ecosystem, and to chat about their projects. We have with us Matt from Ondo and Nick from Solana Institutional. Maybe you guys can introduce yourselves first and we go from there.
I'm Matt. I do work at Ondo on the DeFi, BD, and kind of strategy side.
Hi, everybody. I'm Nick Ducoff, head of institutional growth at the Solana Foundation.
Well, I think the first question that a lot of people obviously want to know at the moment is what problems are you solving or helping to solve with real-world asset tokenization?
Yeah, it's a really good question. I think for a lot of people, they think about sort of just the first step of tokenization, which is bringing off-chain assets on-chain. And for us, we kind of look at it the other way, and we think about what are all of the benefits and unlocks and additional, use cases you can unlock for these traditional assets when you bring them into like a standardized tokenized format. And so a lot of us have sort of seen the benefits that DeFi has for, composability and accessibility to anyone in the crypto space. And we want to bring a lot of that same functionality to assets that historically have been either, much more gate-kept or difficult to access or just not very useful off-chain.
I think it's really interesting to use the word access because that's the one thing that we always talk about as well. I think certainly for farming communities, one of the biggest problems is they have multiple middlemen in between them and the end buyer, which I guess is the same thing as the access points for you guys. Like the big thing for us is removing the friction that exists in the middle, but also directing payments much quicker with stablecoins.
Yeah, it's certainly like the velocity of settlement, and I think Solana's like sort of got that as a core feature tenet, right, of the philosophy. Definitely, having faster settlement, having more efficient cross-border, cross-party transactions, not having to deal with all the frictions introduced by, TradFi is like a lot of middle people, right? But then there's beyond that, just like being able to programmatically change the way that assets work, right? So one example I like to give is you have a yield-bearing asset. Let's say it's, a treasury bill or something, right? Where do you direct the yield? Well, with tokenization, you can actually take that in kind of any direction you want. So you could even imagine a world where like someone holds a, corporate grade, like institutional, bond, and the interest that's getting thrown off gets put automatically into like bonk, right? That's a product that might actually appeal to me. But obviously I'm, a more degenerate person. You might also have approaches where, automatically say, dividend payments get reinvested into the part of the portfolio that you're trying to grow. And so I think as time goes on, like right now we've just seen the first iteration of tokenized TradFi assets, but as time goes on, we're gonna start to see more creative takes where the assets themselves are unlocking new use cases like that are only possible because of the composability.
I think with bonds especially, like there's this idea that we started at a sovereign level and soon we're going to be going much more corporate, and then effectively it's almost going to be personal, right? Which is like smaller and smaller scale loans with a higher and higher risk component. Because I think people in crypto are quite willing to take higher risk protocols and processes, but not so far in debt. And I think it'll be interesting when that does scale out. And I guess that probably moves over to some of the amazing announcements that you've had this week in the world of finance.
Yeah.
Tell us a little bit about it.
We're here today, day 2 of Breakpoint in Singapore, and it's been an exciting conference so far. Yesterday, we had 4 big announcements in the institutional space for the Solana ecosystem. Societe Generale, one of the 28 largest banks in the world, French bank, announced that they'll be bringing their MiCA-compliant bank-issued stablecoin onto Solana, which is very exciting. As you can imagine, having a bank-issued stablecoin in the ecosystem and the level of trust that has makes it really great collateral for the ecosystem, and that will be a permissionless token, which is very exciting. And then Citigroup shared that they've been developing the CDAP, the City Digital Asset Platform, and they've been deeply investigating the Solana technology and ecosystem and are excited to explore ways to connect CDAP to Solana. Securitize, the token issuer platform for BlackRock's BITL token, which of course is one of the larger money funds on chain on Ethereum mainnet. Securitize announced that they are working with Wormhole to bridge assets to Solana, and they also shared that they will be bringing their large assets tokenized on the Securitize platform natively to Solana coming soon.
Right.
And then last but not least, Franklin Templeton announced that their Benji money fund, which is issued pursuant to a public registration statement in the SEC, to Solana as well. So we had, 2 of the world's 20 largest asset managers announced they're coming to Solana, and 2 of the world's 20 largest banks coming to Solana. So I think it shows that the institutions are not only coming, but they're here. And I think TradFi will meet DeFi and create really exciting new opportunities for everyone in the Solana ecosystem.
The euro token is incredibly interesting because, luckily for us, a huge amount of the world's agricultural trades is in US dollars. So it's never really been a sort of pressure point for us necessarily. But it is interesting that outside of kind of USDC and certainly other American stablecoins, there's not really been a huge push for EUR, or even for me as a British national, there hasn't really been an eGBP yet as a big offering. Do you think that more sort of international stablecoin instruments are coming, like a proper acceptable digital yen? I know they're trying digital dirham.
Yeah, I believe GMO has already developed that product, but I do. And there's another ecosystem company in Solana called Etherfuse that started with Mexican sovereign bonds, and they're now working to tokenize sovereign debt in countries around the world. And the exciting thing about that is they're working with Braille, which is a stablecoin issuance platform. And so that they can pair the sovereign bond with the stablecoin as they go market by market and create liquidity in new stablecoins very easily. So I think you'll have stable pairs with fiat from virtually every country in the world, hopefully in the next couple of years in the Solana ecosystem.
Interesting. There's sort of one other question I think everyone, certainly for you and I, that we probably wanted to cover is why choose Solana? Or why did you choose Solana? Sort of one or the other.
It's a great question. So I think you got to kind of take a step back and think about like what is Solana, and like what kind of builders does it attract, and what are kind of the guiding principles behind it, right? And this is something I've always really admired about the chain is Solana has always sort of stuck true to its basic approach to building technology and trying to become kind of like the world's global settlement layer for, originally it was like the NASDAQ, but decentralized, right? And so that commitment, I think, to building really, really high speed, efficient rails is exactly what we need for some of the more high velocity use cases, right? And a lot of times centralization comes about in traditional financial markets just because the sheer volume of stuff that's happening is way too large for, multiple entities to agree on. And so for us, it's really important to have, very high speed, high throughput, efficient transactions. That's like table stakes, right? From there, I think what's so exciting is the community actually. So it's the set of builders. Like when we think about tokenized products, it starts with like, okay, the simplest use cases like tokenized money market funds, treasury bills, right? Something that looks a lot like a stablecoin, but has some yield. And it can be used today on Solana throughout an amazing number of applications. So you have like payments processors, right? Like I bought my breakpoint ticket using a tokenized treasury bill, right? That's pretty incredible. And you start to think about the efficiency.
You can chill. That was USDY, right?
That was USD.
Yeah,
I can chill. Yeah. That's amazing, right? But from there, we're kind of looking at it like, obviously we're not standing still. When we look towards stuff we want to build in the future, Solana's just got the most, I think, forward-thinking DeFi builders in the entire crypto space, because those kinds of builders are drawn toward a network that they know is going to prioritize the ability to get these things done at scale. And so, when you start looking across like the stuff you're building, right? Like when you start looking across the ecosystem, everyone we talk to that like is building on Solana, it's because it's genuinely only possible on Solana. And those are the most exciting, innovative apps, right? And so I think for us, it comes down to the community of, builders, also users, right? Like obviously Solana's had a really great year in terms of user growth and adoption, and we just don't see that momentum going away. So for us, it's somewhere that we absolutely had to support.
Yeah, I think for us, we always break it down into the idea of the tech, the support, and the community, which are all the three reasons kind of why we chose Solana. I think when we
I'd add a fourth, which is the deep liquidity, right?
yeah.
This year we passed Ethereum mainnet on DEX volume and NFT volume, stablecoin volume. I mean, virtually, every key metric, Solana is now outpacing Ethereum. And so, in addition to the great tech ecosystem, you also have that deep liquidity, which enables, the great work that you both are doing.
Yeah, and I think you're totally right. And the idea of sort of more and more debt and sort of various vehicles for lending that are coming in, it adds the level of operability to certainly what we do that allows it to actually work properly. Because you're going to need more and more people to come in, whether it's supporting receivables, trade finance, or just general corporate debt. I think it's something that is always going to be a growing problem.
Yeah, I mean, the liquidity on Solana is even more impactful, I think, than most people realize, just because, and like Anatoly talks about this a little bit, like the friction to moving that liquidity is so much lower. So you get this like much higher capital efficiency effect where, if there's like some small arbitrage across a couple of markets, that's like got the liquidity out of whack, like it's basically free for someone to come in and adjust that, right? And obviously it leads to like major headaches for the people building the core protocol, because you have just so many profitable transaction opportunities. But the fact of the matter is that keeps the markets in check, right? And so when you look at
Well, a lack of immediacy always builds a sort of lack of trust, right? Whenever there's too much latency, people are going, well, what's happening on behind the scenes that we don't understand?
Yeah, I mean, you look at a DEX swap and you have to set your slippage, right? It's
Yeah.
like on Solana, you don't have to worry about that nearly as much as you do on chains with like larger, longer block times.
Yeah.
And so I think it's almost misleading even to look at these volume numbers or to look at just like sheer DEX liquidity depth, because it is so much more efficient for that liquidity to sort of fill in after the trade happens. And so $1 on Sol is meaningfully different in terms of what it enables versus $1 on a chain that maybe has higher transaction costs and frictions.
It's funny the idea of what breeds low latency, because wasn't it the Telegram was first invented purely to swap pricings for cotton out of America between England, and I think that's still the sort of problem set today, is like the immediacy of communications often comes down to financial pricing and information. I think it's definitely something that we're still dealing with.
Yeah, and as like a, technologist, you think about it, you're like, wow, like, you start like Mert's like tweeting about this all the time these days. We're building a new internet at Solana, right? I mean, that's like obviously like a little bit of a big
Verbose.
statement, but like you do kind of start to get this feeling. This is what I've always loved about crypto. It's something genuinely different. It's a sort of like, fabric of communication that doesn't look like anything that's ever come before. And this kind of financial innovation is just leading that fabric to become more hardened, more efficient, higher throughput. It's actually starting to push the bounds of like multi-party communication in a lot of ways.
And it does enable, the merging of things that have previously been discrete. So one thing that our president Lily Liu talks about is this concept of PayFi, which is this idea that on the chain, um, assets can be married with payments and ultimately serve, a similar function. And I think USDY is a great example of that. It's a yield coin that can be used in payment. You bought your breakpoint ticket with it, right? So you were earning that 5% yield all the way through to the moment um, where you purchased the ticket.
Yeah, and that kind of like capital efficiency is like a meaningful improvement over the traditional systems, right? Where you have settlement times, and you have to sell your yield-bearing assets and for fiat. Then you have to send the fiat to the checking account, and then ultimately like swipe the card, and the merchant has to wait several days for the settlement. Like we're kind of moving forward the world's payment systems as a whole in crypto in a way that like without the sort of like on-chain markets, you could really never you could never settle this stuff so efficiently and reliably, right? And I think with back to your like point about foreign exchange, the forex markets are like the craziest example of this. They're literally global, right? And when you have every single country in the world trying to figure out how to interface with each other on like a financial market, you lead to like really crazy amounts of like trustlessness and not being able to like trust your counterparty and not knowing how much liquidity is really there. And it's like super like, obfuscated, not transparent, opaque. Yeah. And on crypto rails, actually, like there's no reason why we shouldn't treat these things as just assets, right? And I think PaymentFi is like the natural evolution of that, where it's like, why should I care what currency my merchant ultimately wants? I should care about like how I want to store my money. And then from there, at the very last minute, I can just in time get liquidity on that, pay the merchant however, or they can get liquidity on the coin that I want to pay in. It's like it's really cool.
Well, it kind of leads me on to the final question, which is, what are some of the big drivers of mass adoption now? What do you think is standing in the way of the next sort of 100 million, 200 million people? Because we were talking about this as a team earlier, and I was saying as much as the evangelism of the crypto community is amazing and it's driven forward the first steps, one of the things that I think can sometimes be a challenge is using exclusionary language. Like, as much as I've started deliberately using RWA because at conferences and things, it means that people instantly know what I mean. On the opposite, I've now started to confuse my friends and family who historically kind of did understand what I was doing and did understand about because I used to approach it when I spoke to people in the terms of what the blockchain was doing and how, there's immutable data and there's instant settlement, and these things together can allow the easy trade of agriculture. But now I've almost found myself using more exclusionary language because I'm deeper and deeper into the community. So I feel like that for me is one thing that we almost need to be careful of when we talk to the outside world. I don't know, what do you think, Nick?
Yeah, I think that what you said resonates. I think one of the things that will help us get to 1 billion plus users of the blockchain is as TradFi and DeFi become more married. So, in addition to the great financial services firms that announced that they were coming to Solana yesterday, I also look to financial services innovators like Fidelity. A lot of people, in crypto may not even know this, but you can buy spot BTC and ETH in your Fidelity app. And that's pretty incredible when you think about it. And so one of the things I've been saying lately is the Bitcoin and Ethereum ETFs are just wrapped cryptocurrency. We often talk about it the other way. RWA is essentially wrapped TradFi,
Yeah.
right? But now you've got the TradFi market actually wrapping native digital assets and bringing those digital assets to the buyers of TradFi, right? And so I think that you'll see more and more of that. There's so many quality assets out there, native digital assets that are quality assets, not just cryptocurrencies, but firms that have been built and issued their own native tokens, right? I think you'll see TradFi demand for those over time, and I think maybe in the short term those get wrapped as ETFs and ETPs, but ultimately they'll be held directly as tokens. And similarly, we're wrapping ETFs and like Ondo is doing and bringing them on chain as tokens. But I think those two things get married over time and ultimately share the same interface, and that's when the whole world will be able to be using the blockchain, even if they don't know that they're doing so.
Because we talk about access, and you were saying that earlier, and that's always a big delivery point for us. But one of the things certainly in some of the emerging world that we have historically struggled with and now create our own value add is on and off ramping. The idea of allowing your digital dollars, your digital euros, your digital yielding assets. We still, to allow people to be educated and happy with using these products, we still need to have instant access and low cost access into bank counters when we want. And I think that one of the remaining stumbling blocks at the moment is people are vastly underestimating how expensive on and off ramping is in a lot of jurisdictions. But I think over time we're creating much better rails for doing this.
Well, listen, I mean, Societe Generale yesterday talked about their vision for the future. They're bringing a bank issued a MiCA compliant stablecoin, to Solana, and they very much see over time. I mean, the regulators, don't necessarily allow this today, but imagine being able, to take your deposit and turn that into a token, right? And then being able to use it in DeFi, and then coming back the same route with your bank, right? Without having to use, any intermediary, right? Franklin Templeton also, I think, has talked about a similar vision for their Benji token. So, and banks are already doing this, right? Citi has Citicoin, which is just a layer that sits on top of their deposit accounts for their large business customers. So, I think you'll see this kind of that gap close over time, and it'll become easier to move from cash to on chain and back. And I think that line will blur, and over time it will become indistinct.
Yeah, it'll be about where does the user want their asset, right? Whether that's a fiat currency or if it's a stock or a bond or a fractionalized real estate or grain, right? Like it'll be about what representation of this asset makes the most sense to whoever owns it at any point in time. And the line will ultimately be just totally blurred. And I think for a lot of people in the RWA space, are sort of, we've all seen these charts from like research reports where it's like, up and to the right, right? It's like we're gonna have $10 million trillion of tokenized assets on chain by 20, however many years from now. No one's gonna call me out on it, right? And the way that I think about that, people love charts that go up and to the right, right? But ultimately, what we should all be building toward is more of like a stasis, like a steady kind of point where assets are constantly in flux, moving on and off of chains, on and off of like TradFi rails, right? And at any point in time, there could be more or less demand for the tokenized version or the non-tokenized version. But once we sort of solve this, this friction of the like layer that sits between TradFi and tokenized like representations, it's going to make that feel much more of like a balanced, steady state, rather than just like perpetual up and to the right growth.
Yeah. But also, I suppose the idea of dynamic supply and demand, right? Like coming in from both ends as opposed to one consistent controlled flow.
Yeah, exactly, right? I mean, to your point, we see this with the ETFs, right? We might even see it with tokenized ETF. People think this is crazy, but there's a good use case. So, like, tokenized Bitcoin ETF can serve as like a very well trusted version of like a representation of, say, ETH or Bitcoin on Solana, for example, right? And I think Coinbase is bringing CB ETH anyway. But a lot of people would rather have the trust assurances that they get from one of these ETF offers, right? So what happens when they start to say, hey, what if I partnered with someone to put this as a token, right? And people can get better capital efficiency on their Bitcoin and ETH and whatever. And I think that's also like, you can see how circular it will become at some point. But yeah, it's like inflows, outflows from both directions. And
Well, wasn't the
ultimately,
ETFs, it's basically people who want access to the world of crypto without having a wallet. So what's kind of the next version of that? How can somebody who doesn't want to have a wallet, who doesn't want to engage in any sort of exchange, but they still want to have access or some kind of purview, what are some of the next options?
I mean, I think like as time goes on, you'll start to see applications that use, account abstraction or whatever to abstract away the crypto experience completely from the user.
Yeah.
I think as an industry, it's kind of on us to build infrastructure that feels reliable enough for that. A lot of fintech firms got kind of burned actually with Luna, where they were offering these like, 10% yield to the user on US dollars and don't worry about it, it comes from crypto, right? And I think a lot of people are feeling a little bit shy about, starting to abstract stuff away again. But as time goes on and as we get better use of technology like ZK that can like enhance, reliability of these machines, we're gonna wind up in a place where you can build better consumer-facing apps that don't have to, require the user to write down 12 words or 24 words, ideally 24, and bury it in the backyard or something, right? Um, but at the same time, I think part of what's important about access, right, is a lot of times these firms as part of their, a lot of consumer facing firms as part of their go-to-market spend a lot of money on like user acquisition, right? But this tech isn't like, it's not like it's not useful to someone that doesn't have as many assets as these firms would require. So, you look at people that are unbanked, and it's like it's not worth it for banks to open up branches in every small town in whichever country, right? But at the same time, they can still use crypto just as much as anyone else can, and it's still just as useful for them. And so for a lot of people, I think self-custodial wallets will actually remain like the easiest, cheapest point of access for a long time to come.
Yeah, maybe as the last comment, I'd also give a nod to another recent ecosystem company that joined the Solana community, which is Libra Capital, and they bring alternative assets on chain. So they brought Hamilton Lane's private credit fund and Brevin Howard's flagship hedge fund onto Solana, and those alternative assets typically have quite high minimums, like $250,000 or higher, and by bringing it on chain, they can now lower those minimums to like $10,000, right? And so increasing access, increasing distribution, making it easier for folks around the world to get access to these really high quality real world assets, I think is really exciting, and we're just getting started. And it's thanks to AgriDex and Ondo and all of the other great companies building the Solana ecosystem.
Well, thank you very much. Thank you very much, guys, for watching, and thank you very much both for being on.
Thank you.
Well, I think that was very enlightening. It's incredible to get people's different takes on what's emerging out of the world of Solana, what's going to increase the world's adaptation and integration of crypto and blockchain technologies, and most importantly, what's going to drive adoption. At the moment, we have an incredibly evangelical and excited community, but if we really want crypto to take the next steps ahead, we need to encourage more and more mass adoption and more incredible apps that give us access to the true benefits of blockchain technology.